Hi everyone, welcome to Chartlens. In this video, let me explain you why this is the right opportunity to invest for an active or passive investor. So before I proceed my video, let me give you the standard disclaimer that I am not here to give any buy or sell recommendations. So kindly consult your financial advisor before taking any decisions, and we are not responsible for any kind of decisions. So now let us start. So let me show you something. This is the Nifty heat map of completely 500 of Nifty. So if you see, there is a sea of red and there is a panic sell in the market. And now whenever there is a panic selling in the market, and here where all the retailers or probably all the institutionals will step in to buy the stocks or ETF level. Now there are two set of people in market, and first set of people will buy the stocks during the market correction. Now there are second set of people who buys the ETF whenever there is a market corrects. Now I am in the second zone, means I am where the buy the ETFs in the dips. I am not here to buy the stocks when the market corrects, and there are a lot of reasons. First thing is that whenever you buy the stocks during market correction or probably during the any kind of market, you have to know certain things. First thing is the fundamentals of the stocks. Second thing is the risk aspects, and third thing is the maybe the margin of safety. Now with all this, it all depends on the how much you're buying as well. So because of this, since the investors doesn't have time to track about the companies, or they don't want to take too much burden, they always go for a second camp, that is ETF camp. Now let us assume that you buy the dips in the market, assuming that you love the stocks or whatever might be the reasons, or someone would have suggested that it's a good stock. So let me show you some example now. Now for example, if someone would have bought, let me take Tata Elxsi. Let me take you. Yeah. Now look at this. If someone would have bought Tata Elxsi, during this correction, assuming that it has fallen more than 30%, and now still after 3 years also they are left with same price, close to at least 30% fall. Now imagine if you would have invested 1 lakh, your portfolio would have come to 70,000 now. It's not because you made something wrong. It's just because you cannot track the company so easily unless you are so active in market, and the risk aspects is too much in stocks. Now similarly, if you would have invested in DMart, look at this, it made top on 21, and now if you have bought in somewhere around assuming it's a dip to 30-40% fall, you would have been still same zone, nothing gain, nothing loss. But what you lost here, the one thing, your time value. Second thing, there is a chance that it might fall more than 30-40% also. Now let me take another example. Just look at this. In 2018 it made a top, I guess. Now if someone would have bought thinking that okay, it's 60% down from here, so let me buy this. Now imagine if you invested 1 lakh, your portfolio would have come to 6,000 close to now. Like if you invested 1 lakh, your portfolio would be 5,000 left, minus 95,000 loss. So this is the risk which has in stocks whenever you buy during correction or any kind of market, unless you're active trader probably who tracks all the things, or probably active investor who know everything, and if you have a proper exit plan. If you cannot do all those things, that's the reason I told be in the second cap, that is ETF. Now let us understand what exactly ETF in a shorter format. Now for example, take the Nifty 50. Now in Nifty 50 we have 50 set of stocks, which is nothing but Nifty 50. Assuming that if any of the stocks is not performing well, now what happens is that the exchange will step in and they remove from the Nifty 50 stocks of the particular stock, and they'll add some other stocks. This is how they manage the index level from the ETF basically. So that's the reason I buy Go ETF, where there is a margin of safety and the risk also is comparatively less. And the being an active or a passive in the stock market, the first thing you have to always focus on risk, not on returns. So that's the reason I'm telling there are a lot of risk in stocks whenever you buy. So that's the reason be in ETF camp. Now with this prospection, let us deep dive into complete analysis now. Now, as I mentioned that whenever there is a panic selling in market, buy for ETF. Now let us dive little bit into depth of it. Now let me show you the example or give reason why I'm calling as a correction now. So let me show you something. Just a moment. Yeah. Okay. Let me. Yeah, it's fine. Now currently the market in the situation is that the percentage of stocks above 50 moving average is less than 16% or less than 20%, and this is how I call it as a deep correction. Now if you see 200 the percentage of stocks above 200 is close to 27. Now first let us check the percentage of stocks above 50. As I mentioned you 16. So when was the last time we got this level 16 percentage, below 6 well, below 20 percentage? So now we got below 20, and again before this we got February of this year, or I mean this year we got twice, and we got on April 22 and November. So what I mean, what they exactly says that is that the very rarely we get this kind of opportunity where the correction is very less than 20%. Probably 8 times or 9 times max, I don't know, maybe in the recent years, or if you take from last 5 years, 1 2 3 4 5 or 6 maybe. So, and this is the time whenever the market percentage of stocks below 20 in terms of 50 moving average of total market, this is the time where you have to at least invest 30% or probably 20%. Now let us come back later what you have to invest, but on an overall portfolio level, let's assume you have 10 lakh in your portfolio and you're waiting opportunity to invest in market. Now what happens is that you come with let's take 30% example. Now out of 10 lakh you take 30% of 3 lakhs, I mean total 3 lakhs, that's the 30% of 10 lakhs, and you divide into probably another 10%, probably 10 lakhs, 10 lakhs, 10 lakhs, so 3 times, and you have to invest in any ETFs. So the reason you got to know why I'm calling as a deep correction, it's because the percentage of stocks above 50 is less than 20, and if it's good, if it falls further from your close to 10%. Anyway, that's the reason I'm telling to invest only 30% of your capital, not completely. Because in ETFs you can you can average it later. But again, always remember, do not do same thing in stocks. Stocks is a different ball game. If you're averaging down in stocks, it's like taking losses like anything. So now coming back to ETF. Now we are investing only 30%, assuming that it's a deep correction. And now let me show you something, same parameter in respect to 200 moving average. So now currently if you observe, currently the percentage of stocks about 200 moving average is already 27%. Ideally if it comes to 10%, it's very good. Because whenever it comes like 10%, it's called a bear market, below it's a bear market, or and look at this occurrence. Last time it was occurred in 25th of March, I mean this year March, and before it happens in 22, again in COVID time. So the occurrence is hardly 4th time now. So but I don't know whether this might come to 10 or it might reverse from here. That's the reason I'm telling at least invest 20 to 30% of your amount. And look at recent 1 month highs. It's very it's falling like anything. So this is the reason I'm telling market is in a kind of deep correction now, and this is the right opportunity. You can invest in a pyramid or whatever called tranches kind of thing. Like if you have 10 lakh, put 30% only. Later if it falls, you can average later. Again telling only ETF, not a stock. So now coming back to chart, what to invest kind of thing, right? Next question comes, what to invest? When you look at the Nifty, currently Nifty is kind of in close to all-time high of 5%, below 5%. So I feel now investing on Nifty 50 not a very good buy zone. But again we can invest like 10%. Now whatever I told, like out of 10 lakh you have 3 lakhs to invest. Now 10% at least close to 5% you can invest in Nifty base. Let me open the Nifty base. I don't know what is the value currently. Okay, now if I talk only about Nifty now, when was the right opportunity? When was the opportunity which we missed earlier? If I check, let me show you. I think that will be more clear now. Let me give the weekly time frame. Yeah, look at this. Before currently we got upper when it falls more than 15% in the month of from September 24 to I think in around April March we had an opportunity to invest in Nifty. No, which we got 15% correction, and before this when we got a correction that was occurred in October 21 probably till October 22 till July 22, so we got 70% correction. So at least whenever the Nifty corrects more than 10-15% you can directly invest, not a problem. But before this, look at this, didn't get any opportunity to invest out of it, only COVID level. And now what the mistake you guys does, you invest when market is at top, like you invest in ETFs when it top. Don't do that. Always buy the ETFs when there is a panic in market, like kind of 10-15% correction. So since we don't have much correction in Nifty, hardly 5%, just you buy 5%, that's it if you're starting off your investment. Or if you have the existing investment, you can just you can just add another 5% kind of position. Now this is Nifty. Let me take you the mid cap or small cap. Just a moment. Okay, let me take the mid cap now. Mid cap also same story. It's hardly 6%. So I don't think it's a right opportunity to invest now. Just wait for a couple of weeks. If it's fall further, probably you can add it out. But now if you don't have, at least if just you can take hardly 5% again if you really wanted to buy. Now when was the last opportunity we got? Look at this correction. Close to 20% correction. So as I mentioned, whenever we get 15 to 20% correction, that's where you have to lump sum put it ETF, at least 20-30% of your portfolio level. And this would have been now I think 27% already. And before this when we got, look at this move. We didn't get any opportunity to invest. Hardly 7%, 9%. So any opportunity we didn't get. And this was the like kind of massive rally. And look at this movement. Again got 23% correction in November 21 to 21 to 22 year. Look at this 1 year time frame. And before that, no, we didn't get anywhere. Look at this fall. This is the mid cap. So that's the reason I'm mentioning during panic selling buy ETFs, not the stocks. So let me take you another example now. Small cap. Let me take you to this small cap. Okay, small cap is close to 17%. I think for me it's fine. I can go 10 to 15% now in this small caps. So before this we got almost 25% correction. So that would have been good investment if someone that entered this zone. Look at this. Before this I don't think much we got. Here at least we got few, but not that much deep. Look at this. Look at this. Close 30%. Now it would have been 20%. So just a moment. So this is about Nifty, mid cap and small cap. Coming back to index, I don't think we have any media index. It's been dead from long term. Look at this. It's been close to 60%. I don't think we have any media ETF or mutual funds to invest. Now reality. Look at the reality now. Look at the fall. It's close to 34% fall. Now what I'll be doing here? I'll be just a moment. So I can invest 30% of my portfolio. Like if I have 10 lakhs of capital, I can invest in probably 3 lakhs. Out of 30%, I'll invest 10%, like kind of 1 lakh in the reality base. Now suppose tomorrow, because of uncertain market will for further comes to somewhere around this zone again, I'll pyramid it. I'll average it down. Not a problem. It's a ETF, not a stock. As I told you earlier that margin of safety is very good in ETF. You have to buy whenever there is a dips in ETFs. So I will average it down. I'll put 10% here, or else I'll put another 10%. I'll put another 10% when it falls. Let's assume that this is the bottom for the real. Assuming that this is the bottom now. Now what I will do? I'll wait for another certain weeks till we get certain base like this. So when it reverse it up, I can add further. So nothing to worry. At least I have the position earlier itself. So this is I think the margin of safety is very good in reality ETFs now, where I can put 15-20%. If it falls further from here, I can invest another 10 for 5%, or if it goes from here, I think I can add another 5%. Look at this, 30%. So that's why reality base has a very good opportunity for the long term investor, like more than 5 years time frame, not like 1 year 6 months short term. No, I mean like more than at least 3 years. And don't check the price every day. This is for long term. No, hold on. So let me take you pharma. No, pharma, I don't think much correction. No, this should have been much. Okay, no, we miss pharma. No, healthcare. No, tourism, I don't think we have any index. So that's from power bank. No, FMCG. Look at this correction, FMCG. No, close to 20%. I think we can invest 10 to 15% here, not a problem. But if it falls, it might steep fall, but no problem. Just go with the 10% and then remaining you can pyramid out. Look at when was the last opportunity we got. I don't know, we didn't get any opportunities so easily. I think we got in 22 March. Yeah, 26%. So I think it's a right opportunity here also. Energy, I don't know. I don't want to bet in commodities kind of thing. Depends on the commodity cycles. No, fine. I don't want to do that. I think nothing much. This is also near all time 10% hardly. Look at the auto. If someone would have invested at 27%, at least look at this. This is what I mean to say now. If you buy somewhere in bottom out somewhere in this phase, already would have been 30-40% returns. Look at this. When was the last time we got opportunity apart from this correction? No, nothing. No, where you got. From COVID level, it's a different. No, let's just look at this. Just a moment. I don't know what happened. 232%. Oh my god. Look at this COVID fall. Metal, I don't think so. We have any. No. PSU Bank, no. It's already. Look at this fall now. 30%. If someone would have added here ETFs, probably 46%. Oh my god. Okay. I think IT also has a good valuation comfort now. Look at the IT. Let me see what's the percent. Okay, not so. I mean, it's kind of, we can go with only 10% size max, 18% down, so you can go 15-20%, or at least 10%. If it's fall, go another 15%, 10%. Look at this return, massive rally during COVID time too. So, and look at this correction now, 30%. See, this is what happens now. That's the reason I told more than like 3, 4 or 5 years time frame. This is how you have to sit idle in ETFs. Since you're buying for long term, only thing you have the concern is that the margin of safety on downside is very good. The chance of falling will be very less, and you can start pyramiding here, 5%. So that will be good. But you have to face this kind of, because see, since you're not active in markets, it's obvious that you don't know which theme is running in market, right? So it's, but what are the amount you invest? That's fine. It's the margin of safety is very good. So think from that perspective. Returns, obviously market will take it, don't worry about that. Look at this, so nothing much. So now I think it's time to conclude now. So what are the conclusion we came? First thing is that whenever there is a panic selling in market like this, whenever there is a correction in market of more than 10, 15, 20%, that's where the active investor or passive investor should step in. So step in the sense, let's assume you have 10 lakhs ready cash to invest in market, put only 30% for overall. Now what is overall? I mean now we saw a couple of bases like reality base, FMCG base, and then IT base. Put only 10% for each, like 1 lakh for IT base, 1 lakh for reality base, and 1 lakh for the FMCG. Now once the market again reversal from here, you can add further 20% for all. Or once suppose if there is another fall in the market, you can double up your position. So this is how we have to balance it out. Now the other reason I explained is that why we call it as a correction. Now again I just want to conclude, since this is also kind of a business, don't be over smart and buy the stocks in this market. If you are investing in stocks in this market, be ready to take a lot of losses. And I showed a couple of reasons also why S Bank, IRCTC, or probably RVNL, like you have to go with those kind of either the bad phase of the business, or you have to you have to be like forced investor. Please don't do that. Invest in ETF, be peaceful. I mean, don't want to see daily ticks. Just enjoy your life and wait for this kind of panic selling and then buy lump sum if you're an active or passive investor. And don't buy in tops. Like for example, I showed in Nifty is hardly probably 5-6% down from top. Don't invest heavily. because that rally you missed it when to invest. Now we have the opportunity in mid cap, small cap. Small cap, I think it's very good to invest, so you can invest there. So that's it from my side. Thanks guys for watching. Have a good day, and kindly subscribe for more informative video like this.